So you want to trade futures? Here are 5 things that you should know before you even start. One of the easiest ways to prevent unnecessary losses is to just simply have your shit together before you start. So many people jump the gun. They see someone talking about something, they see it on TikTok, they see it on Instagram, they see it on YouTube, and they're like, oh my gosh, I could do that. Let's go. They take the bare minimum steps. They figure out kind of a broker. They like, okay, let's put some money in. Let's go. And they don't do just a little bit of work ahead of time to get themselves set up before they start trading. I think we've all been there to some degree, but after this video, in just a few minutes, you're going to have a really nice step-by-step process to get you set up and on the right track to start your own trading career. Let's just dive right in. The first thing you need to do, okay, we're going to ask the question, what are you trading? We're talking futures here in this video, but there's a lot of different futures that you could trade. You want to trade the S&P, you trade in micros, you trade in crude oil, you trade in crypto, you trade in Bitcoin futures. There's a lot of things that you can trade. And I will tell you firsthand, when we start, we think we can trade everything. We think these patterns, these things, all these things are so easy. They're going to apply over here, over here, over here. And they certainly could. But each product, each market that you get yourself into, it makes sense to have a little bit more background, a little bit more understanding, or at least some time on the screens, the charts, or at least spent researching and back testing before you start trading, one strategy over here and applying it over here and over there. But before you even get into that, like, what are futures? Well, futures essentially are a derivative, right? It's a type of derivative contract agreement, if you will. And you're saying, hey, I'm agreeing to buy or sell a specific asset, commodity, whatever it is, security, at a specified future date and time for a set price. I guess date and time, same thing, for a set price. One of the most popular exchanges will be CME Group. Many of you will probably be familiar, or if you're not familiar, look up CME Group just to understand what they're all about, what they have available to trade, because they've got a ton, where that came from, and then you'll want to have a brokerage platform that aligns and allows you to trade futures. And there's a ton out there. We've got some videos here on the channel that have covered a couple different brokerage platforms. There's so many out there. We can make a video covering maybe a top 5 or a top couple list in the future, but it really comes down to just trial and error. A lot of them are going to be very similar. It just comes down to fitting your needs, different fee structures, different platform fees, and all these different things. Do they allow you to trade what you want to trade? So as we understand what we're getting into, what futures are, why do people want to use them in the first place? Well, there's really a couple different uses. Speculation, I'm sure most of us, as I say the word speculation, you're like, oh yeah, here. That's actually what it is. We are legitimately speculating on price based off of a technical or a fundamental signal or whatever pattern or whatever we trade, whatever edge you want to call it. We are speculating on price, and we're going to be trading futures contracts to capture larger gains than if I was to just, buy the S&P 500 and get a 0.25% move. You know what I mean? So that's what we're going to do. Now, bigger money, hedge funds, many times you'll see them actually use futures to hedge, like legitimately hedge their positions and whatnot in their portfolios. So there's really kind of 2 ways to view it. You can be the speculation guy, which is looking to make money off of price action movements. I think price is going to go up or down here because of this, this, and this. I'm going to speculate, take a position, boom. Or you could be the hedge player and use futures to hedge portfolios. Number 2, context. When we get into context, we have to understand what markets we're trading, like we kind of mentioned before. So let's dive deeper into this, right? Are we trading the S&P? Are we trading crude oil? Are we trading the bond market? If we know what we're in, great. We've got a framework. We've got a starting point. Now, let's dive into contract expirations. When do the contracts expire? And if, for example, you were to pull up CME Group and you said, I want to trade the S&P 500 futures, pull up CME Group, jump on through, and they're going to have detailed information as to expiration dates and all that stuff. So it's just a little bit of research. It does not take very long, but make sure you're aware of these things, okay? So when the time comes, okay, it's time to move on to the next contract that expires at this date because now we've reached the end of these, okay? Just so you are aware of that going in. On top of context, there's news and data releases. Why this is super important, because people overlook this like way too much, and it's not that complicated. But if you don't have an understanding to the news that drives this market or that will affect price, you shouldn't be trading in that market. So for example, there's different oil storage reports that come out. So if you're trading crude oil or you're trading natural gas, they have similar reports. You need to understand when those reports drop and what times of day those reports drop. Because if you are in a trade and the report drops, you can get some crazy volatility that could stop you out, then go your way. You just want to avoid that. Or maybe you don't want to avoid that, but at a minimum, you need to know when that's coming so you can prepare yourself for that trade, for that event, or for whatever you need to do ahead of time. The next thing would be like, for example, if you trade the S&P or the NASDAQ or the Dow. If you're trading those markets and there's an FOMC meeting or there's a press conference and Jerome Powell is speaking, or there's jobless data that comes out, or there's a CPI release, you should be aware of those times. And for example, you can use on marketwatch.com, there's a US economic calendar. Great. If I'm trading the US markets, this is a great place to start because they're going to have dates and times for when all of these releases are coming out. Another one could be financialjuice.com. They have different platforms, different versions here, but you can go in here and get a ton of information and a ton of news right here on Financial Juice. So a couple sites to kind of get you going, but again, if you are understanding of the market you're trading, you'll have a pretty decent list. And it's not a difficult Google search away to find when the releases come out, when big news drops. And of course, as you start to trade these environments and trade these markets, you'll start to get a feel for what news moves things and what news does not. Okay, so now let's get into the good stuff, the actual money. But before we do so, I do want to thank the sponsor of today's video, Jigsaw Trading. Jigsaw Trading offers traders an edge in the markets through powerful and intuitive trading software. With advanced tools for order flow analysis, visualization, execution, and advanced analytics and trade journaling, Jigsaw Trading gives traders a real-time view of market activity and helps them make better informed trading decisions. Whether you're a beginner or an experienced trader, Jigsaw Trading has something to offer, from their starter package to their professional package. Plus, their team of expert traders is always available to provide guidance and support. Take your trading to the next level with Jigsaw Trading. 14-day money-back guarantee. Try it today. Thanks for Jigsaw for sponsoring today's video. All right, awesome. So let's get into number 3, that's money. When it comes to money, we need to understand the margin requirements. So what does that even mean? How much money, essentially, do you need to have in your futures trading account in order to trade the contracts that you want to trade? So for example, I know Tradovate is an account that allows you to have like $50 minimum in your account. So one could trade with like 65, 75, $80 in their futures account and trade the Micro E-mini S&P futures or the Micro E-mini Russell, I believe, are the two you could trade with that size. And so you have to know per broker. This is something that changes depending upon the broker. But based on your broker, as long as you know what the margin requirements are, what is the amount of money that I need to have in my portfolio to place this trade, okay? And then what are they going to do if you hit a certain drawdown? There are potentially fees with that. So this is going to vary broker to broker. I know, for example, that Tradovate is one of the easier ones to get started for beginners because it doesn't require you to have a lot of funds invested or have a lot of funds in the account. I believe TradeStation would be like kind of another tier up where you could get started for like a couple $100 and trade the Micro E-mini S&Ps. And then if you go to like, let's say an Interactive Brokers, I believe you may have to have like $2,000. Don't quote me on that exactly. And these numbers could change based on the broker. But for example, like those are things that you'll have to know ahead of time before you get in and start trading with the broker, right? So, okay, if you know you want to trade with Interactive Brokers and you have $500, well, guess what? You're probably not going to be able to trade with Interactive Brokers. Okay, so I got to use this platform. Do I want to use that platform? These are things you need to know going in, and they're all easily accessible upon the brokerage platform's websites. Or it's a simple email away, and many times they'll get back to you the same day. You'll also find contract fees, pricing, which also is a factor because almost everything is going to cost, right? So when you are trading futures, there will be fees. Think of it as like commissions, kind of the same thing. Many US equity brokers these days do not have commissions. Webull, Robinhood, TD Ameritrade doesn't have commissions, I believe, for stock trades. But that said, there will be commissions and fees associated with futures trading. You're not going to get around that. That will be part of the game. Building off of that, capital risk management comes down into the money category as well, because you need to know how much you're going to risk. So let's dive in, or let's talk about the Micro E-mini S&Ps for a perfect example. If you are a beginner and you want to start trading the micros, I talk about the micros a lot because as a beginner, if you're watching this video, there's a good chance you haven't even gotten started or you're just brand new. And the Micro E-minis are great. You can trade like micro crude oil, micro S&P, like micro Bitcoin. So you're not risking a ton of money on these trades. For every 1 point move, and inside of each point move, there are like 4 ticks. So you have a 0.25, 0.5, 0.75, and then the whole point on the Micro E-mini S&Ps. For every 1 point, okay, the P&L will fluctuate $5. So if I enter at 48.62 flat, 48.62.00, and it goes 1 point higher, 48.63.00, and I was in a long position, I would now be up $5, okay, per one Micro E-mini S&P contract. Again, pricing structure will change depending upon what you're trading, but you need to know that. Again, you can find that on CME Group's website. You can also do a quick Google search, and the answers are at your fingertips depending upon what you're going to trade. Backing into that, now, because we now know how much we could lose or make based off of a trade, now we can back into risk management, how much money I'm willing to lose on this trade, and so on. We got a visitor in the background. Oh, and I think she's peeing. Yep, potty training is going well here, as you can see. We were just outside, what am I going to do? What am I going to do? I can't get mad. Okay, let's build this deeper. Number 4 is going to be the trading plan. Here's where technical analysis, risk reward comes in, and then a systematic approach. Let's unpack it. So technical analysis. This is not a technical analysis video. We're not talking about technical analysis here. However, that's probably going to be a pretty big piece to your trading. We've got plenty of videos on this channel that dive deep into technical analysis, that also dive deep in different strategies, indicators, volume, everything you want to know, or a lot, not everything, a lot of stuff that you can go deeper into here, other channels, YouTube, wherever you want, okay? That's a great piece to start with. Now we can actually build out our risk reward profiles, because if I'm taking trades based off of this pattern, here's my stop loss. That means I'm going to risk 6 points, 6 times 5. I'm going to risk $30 per contract that I trade. I'm going to look to take profits at 10 points. Okay, great. That's $50 profit on the Micro E-mini S&Ps. Great, $50 profit per contract I'm looking to make. My risk is 30. That's a decent risk reward profile. Let's trade that. And I say that because now it needs to become systematic. We see the setup, see the pattern, have the trigger, the requirements are met, we take the trade, and we're systematic about it. We don't need to start saying, I think this, I think that, and I'm going to try this. And no, that's not trading. That's gambling. That's guessing. That's having fun, messing around. That's not trading. Number 5 is actually trading, okay? I would highly recommend you try a demo account first. Why would that be important, and what even is that? You could get started with a demo account on almost any of the platforms, the brokerage platforms out there that you can trade futures on. Interactive Brokers, Tradovate, I'm pretty sure TradeStation, go, the list goes on and on, okay? You can also not even have to open a brokerage account. Go on tradingview.com. There'll be a link to that in the video description box. Sign up for free. Go down to the trading panel, open this up, go to where it says paper trading, connect that for free, and trade futures right here. Now, If you want to go deeper, you can pay for the platform. We pay for the platform and stuff because there's a lot of perks to having the paid versions. And then you can also pay for real-time quotes. And that's a whole other story. But you could do that. We've got a video covering how to paper trade on TradingView on the channel. But I'd highly recommend you start on a demo account, a paper trading account, a fake money account, just to take at least your first couple of trades. Get used to the platform. Don't just randomly jump. Get used to the platform. Okay, now that we're used to the platform, great. In a perfect world, you trade for a couple of months, prove profitability, then go to real money. Not everyone's going to follow those rules. Not everyone believes that's the best way to do it. That's just a recommendation, but I'd recommend demo at a minimum because demo will be great to kind of just get things spinning. Make sure you know how to execute orders, placing orders, stop losses, take profits. Great. Once you see how it works, now you're not going to make stupid mistakes once you're live and have, oh my gosh, I didn't realize I put 10 instead of 1 contract. Now I'm over leverage and now I lost a ton of money and I didn't. Those things, again, are avoidable. And that's the purpose of this video. So I hope this video helps you guys out. If it does, great. Hit the thumbs up button. Consider liking the video, sharing it with a friend. Check out the sponsor, Jigsaw Trading, with the link in the video description box, as well as other resources. And we'll see you in the next video. Peace.